Welcome to our YouTube channel. Today we are going to do a technical fundamental analysis of Tata Steel. First of all, Tata Steel is a commodity stock, and commodity stocks are generally not for investing, it's for trading. So as we can see, if someone has invested around 15 rupees, 23 rupees in almost 15 years, they wouldn't have got any return. So the way to invest in commodity stock is to invest when the stock is going through a very painful period and the margins are almost negative. So if we go to screener.in and we can see this operating profit margin. So ideally for any commodity stock we should open this screener and check the profit margin and see the when the margin is at their lowest, that is the time, because that is the time when the other smaller commodity in the same sector, other smaller companies would be getting close because they cannot afford to bear the losses. And in that moment, when the smaller commodities companies are closing, the amount of commodity, the supply of commodities in the market will reduce, and then the big companies will again start making the profit. But when the margin is at the peak, at that time all the companies are making money. So there is surplus of the commodity in the market, and the demand is always limited. We will never have like unlimited demand. So that's why the price of the commodity goes under pressure and their margin reduces. That's the cycle we need to follow. So the best time to invest in Tata Steel was in March 2016, around that year. So if we see in the 2016, this is the period where if someone would have invested, they would have got a very good return. And after that, once the margin peaked out, we should exit. It's not like TCS or Unilever where you buy and you hold forever. But something has changed in the past few years. Going by the chart, what I can say, this stock has broken its all-time high and it's going up in a nice momentum. The margin is not at the peak, and currently there is a slowdown going in China. Because of the slowdown going in China, Chinese commodity stocks are dumping their steel and other commodities all over the world, which is putting these commodities under the pressure. Despite that, uh, despite that economic slowdown, our the many means including Tata Steel, other metal stocks are also at the almost at the all-time high. So, by that logic, if we see once the slowdown is over, it should do better than this. So, by that logic, I think fundamentally it is fine. Going by an exception for now that Tata Steel should do good in the coming months. I would say not year because still it's a commodity stock and we should always book our profits. Now let's move on to the technicals. In the technical, we can easily see in the monthly chart there's a very powerful momentum going on. In the weekly, again the uptrend is good, and going in the daily, the uptrend is like a very clear uptrend. No technique, no analysis is needed. Anyone can see the chart and see it's in an uptrend. So for now, I think it's pretty safe to invest in Tata Steel, and but as I told, it's a commodity stock and it will be volatile. So just a reminder, book your profit when you think it's the peak margin is done. So going by this chart, peak margin, like I guess once it reaches around 20%, we should book profit. Thanks for watching.